Divergence detected. SPX at a record high. NDX not confirming. That's the same split the data showed right before the 2022 top. The number one ETF and stock this scan surfaced are still ahead, and the indexes have more to say. SPX just tagged a fresh all-time high, and QQQ closed green. But the divergence right there in the data is hard to miss. SPX made the new record, NDX didn't. VIX barely moved, closing at 14.63. Bollinger Bands compressing, and the back end reads that as a big move building somewhere. Breath lagged all day, and SPX is pressing hard into multi-year rising wedge resistance on the weekly. That tension is exactly what makes the macro readout so critical right now. The macro data split this week. July inflation cooled to 3.4% annual, down from 3.5%, and that lifted Fed hold odds while DXY pulled back and the 10-year eased. But flip to the 30-year, and it's sitting at 5.21%, the highest level since the run-up to the financial crisis. And underneath that, credit card balances just hit $1.26 trillion, near a record. The fiscal pressure stacked behind those yields is exactly what the energy data is about to feed into. Energy is showing a split in the data. Crude is stalling just under resistance, while XLE and XOP are seeing broader improvement than the commodity itself, which is exactly the kind of divergence the scan picks up on. The back end flagged the Strategic Petroleum Reserve at its lowest level since 1983, down more than half from where it sat in 2009. That's a structural supply variable that doesn't just resolve on its own. The connection between that supply tightness and what's driving inflation, and therefore yields, is exactly what's feeding into the metals picture next. Gold is back above its 100-day moving average. Technically, that's a constructive signal, and CTA buying has been rebuilding alongside it. The setup the backend is reading is that classic tension between a technical improvement and institutional distribution pulling in opposite directions. That DXY softness, the same dollar move from the macro data, is exactly the same fuel powering the rotation into international markets right now. International developed markets are showing a cleaner signal right now. There's genuine rotation into quality names outside the US, with Japan, Taiwan, and emerging markets all absorbing that dollar retreat. EEM is up more than 22% year to date, which the system is clocking as sustained macro confirmation, not just a week's noise. The quality ex-US rotation is functioning as a hedge against dollar risk, and the AI concentration trade that's been dominating the index conversation. But if dollar softness is the engine driving that global rotation, that's exactly where Bitcoin and the crypto picture get complicated. Bitcoin is sitting inside weekly resistance, having peaked just under a key Fibonacci resistance level. The indicators that briefly turned bullish during the consolidation are now flipping back bearish. The potential head and shoulders forming on the chart is exactly the kind of structural signal the scan picks up on. On the institutional side, UBS disclosed an $83 million IBIT stake. So you've got two completely different data sets pointed at the same asset. All that noise across the broad market is exactly why the best of best ranking engine matters. It filters down to what's actually ranking, regardless of the divergences. That SPX NDX split the backend flagged. The echo of the 2022 top is exactly the environment where a ranking filter cuts through the noise. The number one stock this scan surfaced is still ahead. SignalFinder Pro processed 146 symbols today, filtering from sectors through ETFs down to individual names, and the shortlist that came back reflects what's actually ranking in a split market. The sector scan ranked healthcare at the top of today's board, XLV at number 1, XLF Financials at 2, and XLI Industrials rounding out the top 3. XLF was the only sector in an active leading state. XLV and XLI came in as ranked setups. Limited daily movement, but structural scores the engine put ahead of everything else. When financials are sitting at number 2 and healthcare is at the top, on a day where tech headlines dominated, the sector data is giving you a different read than the index itself. ARKG came out as the number 1 ranked ETF in today's scan, the ARK Genomic Revolution Fund, high beta genomics and biotech names, healthcare sector. It's on a wait signal, so the ranking engine is surfacing this as a structural setup to watch rather than an active flag. And note this, ARKG actually closed down about 0.9%. So this isn't a momentum call. The engine is scoring the structural setup underneath, not today's move. On a cooling inflation backdrop, that's the backend's readout on where rate sensitivity is building. The same thread that explains the index split you saw earlier today. The number 1 ranked stock today is Palo Alto Networks, PANW, large cap cybersecurity, technology sector, on a watch signal. On a session where software leadership split sharply, PANW posted about a 2.32% gain. The scan's ranking engine scored strength in cybersecurity specifically, the kind that showed up outside the earnings headline noise. That's the payoff the system was building toward. On a day the index divergence ran wide, the ranking engine surfaced the name that cut through cleanly. Turns out, the divergence signal the scan surfaced this morning had a clean payoff. The ranking engine found the strength in cybersecurity and rate-sensitive genomics, not in the names driving the headline split. Tomorrow, the thing to watch is whether the 30-year confirms the bond relief or fades back toward that 5.21% level. Because that answer reshapes the rate sensitivity picture for everything that ranked today. Verify both live in SignalFinder Pro. And remember, this is educational content, not financial advice. Do your own analysis.